Hello guys, and welcome to an update on my Darwinex Zero journey. I have been trading my Darwinex account alongside my main account and my prop firm accounts. It's all being done through a trade copier, so it's a pretty simple process. I'm just using a 1% risk per trade on my Darwinex Signal account. So in this video, I want to show you my performance so far, and I want to show you how close I am to getting an allocation. So we are here on the Darwinex platform. This is my account, so OHGE, and the return is plus 9.4%. So that is the current return. The max drawdown is minus 9.84%. Not the best. It has been a tough period. And the return from the last 6 months has been 5.91%. One more important number that we need to take a look at is down here on the bottom left is the actual Darwin risk. So the Darwin risk is 0.55. So this 0.55 means if I take a 1% risk trade on the Signal account, which is 100,000, so 1% risk would be 1,000 euros per trade, it is actually gonna copy a 1% risk to a 0.55% risk. Okay, so it's going to lower the risk on the actual Darwinex account on this account. That means if I take a winner, it's going to be almost 2 times smaller. And if I take a loss, it's going to be 2 times smaller as well. So the Darwinex risk engine has deemed my strategy to be a bit more risky. So in order to make it more attractive to investors, I have that 0.55% multiplier. So getting back to the statistics, well, I haven't reached Darwinia Silver yet. Unfortunately, I am in the 1,907 position out of 7,317. As you can see, my current rating is 65.73. And the guaranteed allocation, you get a guaranteed allocation at 75. It was a tough trading period, I'm not gonna lie. Here is the performance. You can see April was positive, May was break even, June was break even, July was positive, and now we are a little bit negative almost every month after July. We have some more statistics as well. Now, what I want to show you is I want to go to the equity curve, and it's not that I'm making excuses, but okay, I'm making excuses. Do you see these small peaks right here? So this one, it goes from 11.4% to 13.65%, and then this one from 10% return to 12.7% return. Well, that is actually a couple of trades that were running in some very nice profit, but unfortunately on those trades I did not get an opportunity to put the stop loss in profit. I use a trailing stop loss, and they actually reversed all the way back. You can view them better if we click this sort of a view, and you can see, so here was one on the Aussie Japanese yen, here is another one, big spike, kind of a big spike if you look at the whole picture, and then another big spike happened. I think this was last week. Very tough on the psychology, I'm not gonna lie, but it has been this sort of a period. Most traders would quit during these times. You watch a trade go into 8% profit and then it reverses all the way back. Most people would quit, but that is why the consistent traders are here even through the tough times. I want to show you some examples of what I mean. This is the Aussie and the Japanese yen. The first one was, I think, in September. So this was a nice flag, pretty high probability. I would say it was a very quick flag as well. We call this a flag plus formation. You have impulse up, inside bar, outside bar, and the blue candle is your entry candle. I got in with a 15 pip stop loss, and then it went into almost 3% profit and reversed all the way back down and took me out for a loss. So it was running some good percentage, but then it reversed all the way back down. That is the danger of using a trailing stop loss approach instead of a fixed take profit. You're gonna get some trades that run some decent percentage and then they reverse back. I run the risk of that happening. But for me, it's much more important to extract percentage, the big percentage when it happens. It's not that often, but when the big percentage happens, I'm gonna be there to extract it. And sometimes I'm gonna experience what you're seeing right here. If we go on, I wanna show you another one. Here is another one. Nice break and retest opportunity. So you get a impulse down, trending down, some nice momentum. This was on the 7th of October. I was looking for sell setups. You also get kind of a takeout of this major high, kind of like a liquidity sweep. See, takes out the major high and just drops down. Then really nice momentum, one candle pullback, no shift in momentum, break of the low, pretty good close, not a big wick, and then I set a pending sell limit. I think I got in with a 15 pip stop loss because of the volatility at that time. I no longer use a fixed stop loss, I adjust the stop loss according to the market volatility at that specific time, just using a visual assessment, pretty simple stuff. I usually go from 12 to 15 to maybe 20, maybe 30 pips if the currency pair is really volatile, but most of the time it's gonna be somewhere between 12 and 20 pips. Got tagged in, almost got taken out, and then the price went flying. And it went into almost, 6.1% profit. So pretty big profit, pretty massive profit right there. And then it reversed all the way back up. I only got the opportunity to reduce my risk right here. So it was a loss, but it was a reduced risk loss. And again, I never got the opportunity. See, it took me out with this candle. I never got the opportunity to reduce risk because what I'm looking for when I'm selling, I am looking for swing highs to form, and then I just move the stop loss. So if I sold here, see I would move it first here, then above this swing high, and then above this swing high, right? But if the price is just melting, like you saw here, just melting down, there was no swing high where I could have placed my stop loss. It's just how the market decided to move in these couple of months. So this was another pretty tough trade to watch, ended up a loss. And that's why you saw the spike. And then the final one happened 8th of November, was last Friday, after the elections. Pretty interesting trade, pretty high probability, I would say. I would say it's a no-brainer trade. So you had the elections right here. They started an uptrend. Pretty big, I would say, overreaction to the elections. JPY weakness at first, right? We started going up as expected with a Trump win and a Republican sweep as well. So Trump won and the Republicans took the Senate, which is a full-on Trump sweep, which usually signals JPY weakness, as you saw right here. But then the market decided to kind of go back to the initial levels of the elections, right? Somewhere around here, because this was probably a bit of an overreaction to the elections. So the correction started happening. It was a pretty nice drop. The technicals were there as well. You had an ascending channel, which was a bearish pattern. You had some pretty decent momentum going down. Nice large impulse, pullback, nice large impulse, pullback, no buying pressure, break of the low with momentum. See this candle, nice break of the low. Got in, I used a 13 pip stop loss on this one, tagged in, and then the market decided to melt on Friday, went running into almost 8%, around 7.6%. That was Friday. I did decide to hold over the weekend, and I wish I didn't, but look, it was part of my plan. I need to follow the plan. If I'm not following my trading plan, then I don't have a trading edge. So according to my trade plan, after the US elections, volatility goes down, and according to my research, there are not a lot of gaps in the markets happening after the US elections have passed. That's exactly what happened. We opened pretty much no gap, but the market just decided to go up and take me out for a loss. We never got that swing high where I could have reduced my risk or put the stop loss into profit. We just melted down, okay? And this was a really small loss because I moved the stop loss above this swing high. So this was a small loss. One lesson that I have learned from this. So you saw 3 trades that went running quite significant in percentage and reversed all the way back to either break even or a loss. One thing I learned is I can actually place a take profit on, let's say, 5 to 1. I'm gonna research, I'm gonna look into maybe on JPY pairs, which are pretty volatile, and when they move, they just tend to have big spikes up or big spikes down. My aim is to take 50% of the position off at, let's say, a 5 to 1 risk to reward. So 50% of the position I take off at 5 to 1. The rest of the position, so I take half off, and the other half I leave running with my trailing stop loss rules. Now, in the long run, that will mean less percentage for sure. It's going to mean less percentage. I have had trades going 10%, 15%, 20% in profit. Yes, overall, I will lose out on percentage, but I will preserve my psychology and I will make my results more consistent, which is exactly what investors want. They don't want huge returns. They want small drawdown and they want consistent returns month on month. So if I can lower the yearly returns, but make the monthly returns more consistent and make the drawdown smaller as well, that's pretty much a good thing for me personally. So for example, if I used that approach on the trades I took in the last 3 or 4 months, these 3 trades are not the only trades where I had that happen. I would have made, I would say, probably 7.5%, maybe even higher. So around 7.5% more than I made. So the percentage month on month would be much more consistent. But yes, there's gonna be a day where you get a trade on the Aussie and the Japanese yen, let's say this one, and then I get in right here, 13 pips, right? And I take half of the position off at the 5-1, but then the market opens and just does this, right? Just does something like this. I take half of the position off and I miss out on, let's say, a 15% trade, right? So I make 10% less net. But for me, it's all about consistency. It's all about a small drawdown. It's not about maxing out the returns. And yeah, I definitely want to eliminate these quick peaks and troughs. So these big moves up and moves down, right? You can see them a bit better right here. So I've been a little bit unlucky, but it's part of the game. It's a part of trading. That's why trading is extremely hard. And that is why most people quit during their first year, because this happens sooner or later and they just cannot get through it. Most people cannot get through it. But if you can, then I would say you have a pretty good chance of becoming consistently profitable. One more thing I want to show you on Darwinex Zero, they have added a new feature. So if you go to payments and then you go to allocations, there is a new 100,000 euros permanent allocation. Okay, so this is a new feature. What does this mean? Well, you're still going to have your regular Darwinex Zero account. You pay for the initial fee, you pay a monthly fee as well once you pass the calibration phase. And then you battle it out between other traders, as I'm doing right now, to get an allocation, right? So I'm battling it out. I'm competing with 7,000 or 8,000 traders who all want to get allocations and who want to attract investor capital. Well, this is another option that you can buy on top of your Darwinex Zero subscription. It's kind of similar to prop firms a little bit, I would say. You have a target percentage that you need to make, and then you get a permanent 100,000 euros allocation. A little bit more about it. So it's a one-time payment. So it's permanent, no drawdown penalties, no expiry, no recurring payments. So the drawdown really doesn't matter. It's a one-time fee. But of course, if you blow the account, I mean, if the account reaches zero, you're going to have to build it back up again. So it does not reset when you hit zero on that 100,000 euros. It doesn't work like that. So definitely don't go gambling and don't put on crazy trades so the account reaches zero and that it resets. It's not going to work, of course. And your target quote. So choose your target quote. Choose the quote you need to reach to unlock the permanent allocation. You can start with a return of just 5%. More capital allocation, more performance fees. Boost your Darwin with more capital and increase your performance fees. So this 100,000 euros goes on top of the allocations that you collected through Darwinia Silver or Darwinia Gold program. And it is 100,000 euros per account. So you cannot buy 5 of these, but you can buy 1 of them and it stacks on top of your allocation that you got in Darwinia Silver or in Darwinia Gold. So a little bit more about the pricing. You have permanent allocation, select the quote that you'll need to unlock, the 100,000 euro. You have the current quote, that is my current quote, I guess, and this is the target quote. When you buy this, you need to hit these targets and then you will get that 100,000 euros, right? So if you pay more, the target is going to be smaller. If you pay less, the target is going to be higher, right? It makes sense. If you pay more, the target is just 5%. You need to make only 5%. The drawdown doesn't matter. And then you get that allocation. Also, very important to note, your profit split is still 15%. So the profit split still works the same as with Darwinia Silver or with Darwinia Gold. So 80% goes to the investor, 5% goes to Darwinex, and 15% goes to you as a trader. That is the same thing right here. Let's say you pay 495 euros. You reach the 5% profit in your Darwin account. You get the 100,000 euro allocation, and then you make, let's say, 10,000 euros on that allocation. Well, you will get 15% of that. You will get 1,500 euros. Okay, so I know with prop firms such as FTMO, it is what, 80 or 90% profit split. This is 15. Yes, it is smaller, but look, this is a long-term game. We're here on Darwinex to build up a capital, to build up a track record, to attract investors. The goal is not to make a bunch of percentage. The goal is actually to have a lot of capital under management and to make steady percentage year on year. How much? 10 to 30%, maybe 40%. If you're a really, really good trader, that's amazing. If you can make 30% per year, and you have 1 million in capital or maybe 5 million in capital euros, you can make a lot of money. You can make some very decent profits. So that is basically how it works. What is great is comparing to prop firms, there is no drawdown, right? So there is no drawdown right here. You can go into drawdown as much as you want, as long as you hit that, let's say 5% target. There's no stages. So there's no stage 1, stage 2, funded stage, blah, 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 blah. Only 5% profit target. How you hit that target, that is up to you. You have a lot more freedom to actually hit those targets. So I want to repeat the explanation one more time because I know it gets confusing. If you need any help about it, you can put it in the comments or you can reach out to Darwinex support as well. Okay, so you're battling it out in silver as I am right now, right? I'm battling it out to get a allocation. I have a 65.73 score. I need 75 and then I'll get an allocation. But if I want a guaranteed allocation, I can go to payments, allocations, click this, choose one of these options. Let's say I pick this one and then I pay 495 euros. I get the 5% target. And once I activate it, then I try to make that 5%. Once I make the 5%, then I get the permanent allocation of 100,000 euros. And it is important to mention your profit split is still 15%. And that would be about it, guys. So hope you enjoyed this video. In the next video about Darwinex, I may take a look at some tickers on Darwinex such as THA, see how they are doing, see how much they are making. That's always pretty interesting. This video was more about my journey and all of the struggles I've had in the past few months. These trades on the Aussie and the Japanese yen are making me absolutely crazy. So I definitely need to implement some sort of a change. I think I'm gonna take 50% off at a 5-to-1 risk to reward. I think that's good. So let me know in the comments what you think. If you want to sign up for Darwinex Zero, there will be a link in the description of this video. Click it. There is even a discount on there as well. So definitely check it out. It's a very good option if you have a long-term mindset. So it's not like regular prop firms where you can make a lot of money in a very quick period, but this is more about building a good track record and attracting investors and getting allocations from Darwinex, which can take years. But hey, that's trading. We're not here to make money quickly. We are here to make a lot of money, but in a long period of time. So that's about it. Thank you guys very much for watching, and I'll see you in the next video.